How's it going, you guys? Hi, welcome. It is the end of the week again, and this was a kind of busy week for S&P 500 earnings updates. So I'm going to give you guys weekly updates for the next few weeks, and then we'll go back to end of the month updates after that. Okay. So this week we're gonna be kind of as much quick to the point as I can. As a reminder, if you're looking at this from Facebook, I have screenshots of what's going to get presented in here as separate files as well. So if you don't want to watch the entire video, you can always just go right through the pictures that are attached and get ideas from that on what's basically covered, right? Or you can do your own analysis or whatever based on what information I'm posting here. Okay. If you're watching on YouTube, unfortunately, you're gonna have to watch the video to see all of the content. So it is what it is. Okay, so let's get to the data here. Okay, by the way, for best viewing, this is best viewed again on a desktop computer, not through a phone. If you're watching through a phone, make sure you tap on the pictures if you're looking at if you're watching the stuff, and just looking at the pictures themselves, and you can zoom in. If you're watching through a phone on the video, you're going to have a harder time with this information. Okay, so that's why I recommend watching it on a computer if you can, because it'll be much, much easier for you to see. All right. But so far, we got 109 companies that have reported this quarter. I had 78 updated this week. I was looking at over 100. I think just a little bit over 100 that were on my radar this week, but somewhere around 25 to 30 of them, their tentative dates got pushed back to next week or the following week. So we only got 78 updated as far as this most recent week was concerned. And that brings us to a total of 109. Total year-over-year earnings is now at 22.83%. That is a little bit higher than last quarter's results so far. And we're at 88 out of the 109 are reporting positive earnings growth. 2 of them are neutral, basically they reported the same thing as last year. And only 19 of them are reporting negative performance. So we're up at we're just over 80% positive as far as what proportion of the index is reporting positive earnings performance. And we are just over a fifth of the way through the updates for the entire index for the quarter, 21.7%. 12-month earnings, we're at 11.3, a little bit below last quarter's, but the 12-month performance is more of a trailing indicator anyway. It's a lagging. So right now we're seeing over 20% growth on year over year, but this kind of performance should start showing up later on the 12-month. Maybe not right now, possibly next quarter or 2 quarters from now is when we'll start seeing numbers that are up more in the 20% actual realized growth range. Okay. And this is what we're looking at so far for the next few weeks. The first week you see here is the most recent reported week. Those were 78 companies, and I believe the total year-over-year gains were about $23 a share over previous over last year for those same companies. Next week we have 193 companies to look at. That's a lot. That's a really, really busy week. I'm expecting right now tentatively about $43 per share increase in value. Now, mind you, though, some of these that are tentatively scheduled for next week are going to probably push back to early August or maybe even closer to mid-August. So I wouldn't realistically expect it to be an actual somewhere in that ballpark. What we'll actually see just next week, but somewhere along the way it should reveal itself. All right. And let's see. So Monday should be a little on the slow side. We got one that's tentatively scheduled for today, but why they're showing tentatively today, I don't know. They just don't have, I think, a publicly released or maybe not an announcement date that my source is getting has any use for right now or is good with. It's I highly doubt they're going to be reporting on today. The only company I know of that does not report earnings on a Monday through Friday schedule would be Berkshire Hathaway. They always report on Saturdays, always. They're the only company in the entire S&P 500 that I've ever known to do that. Every other company in the index has always done their earnings updates sometime between Monday and Friday, though. Okay, so yeah, busy week next week. So we'll have a pretty good idea this time next week how this current quarter is shaping up as far as earnings performance is concerned. And then as you see there, first week of August, another busy week, over 100 companies, 124 total right now currently looking at that are on my radar. And they're almost in the same neighborhood, plus 43 as which is almost the same as these 193 that I'm going to be looking at this coming week. And then after that, it'll slow down quite a bit. Second week of August, you'll see we'll get down to about a dozen or so, and then it'll really slow down with the pace there, right? Very little expected there. Means would not expect my target values for the S&P 500 to change much by that point in time either. All right, looking at this info here, total market cap, it is actually down a little bit. I think we were up in the $72.4 or so trillion range last week. We are down to 71.5. So just looking at this alone, without even looking at a price chart, I would say the S&P probably had a down week. Not necessarily, but this is at least an indication that it might have. Total growth, I mean, the percent growth expectation over the next year is plus 16.3. That is just a little bit higher. It's actually gone up a little bit as so far as the quarter is progressing. I think we were just a little bit over 16% at the start of the quarter, and then I think we were up around 16.10, 16.15, or somewhere in that ballpark last week. So it seems to be still showing signs of accelerating, which is a good sign here. Okay, as far as the short-term value of the index is concerned, what do I expect? What do I think is a reasonable price? Right now would be somewhere in this range here, just below 7,400 on the top end and about 7,125 or so on the bottom end. That would be what I would be an expected typical price range. We're actually above that. I think we've been up around the 7,500 level. I have talked about there being a bit of a price bubble because of this, but it hasn't been much, only maybe a couple percentage, a couple percent at most. I think 3% or so is the most divergence I've seen between the price and what I think is reasonable. So it's not too bad, and it seems to be dialing in a little bit as the S&P seems to be kind of going more sideways lately, particularly with what's been going on in Iran and the confusing inflation expectations and whatever else, right? All right, so for those of you guys who retired and want to have if you have an adequate balance, again, if you have a 401k, TSP, whatever, or IRA balance that you're able to withdraw from, I recommend divide that number by your actual balance by 240, and then whatever that amounts to, set that as your monthly withdrawals. All right. Every time the S&P 500 has a down month, recalculate that and adjust your withdrawals. And so that way, if it's constantly coming down, your withdrawal amount is coming down with it. But then as it continues upward on an uptrend, like a longer term uptrend, it'll go longer before you make the next adjustment. And then you'll actually start seeing your monthly withdrawal amounts going up and up and up over time. And your account balances that still keep going up too. That'll be the nice thing about it. But for those of you guys who want some, maybe a little bit more, some kind of a conservative mix where you actually still need to pull from your TSP or 401k, but you're not in a position where you don't need any of it. Okay, right. And for those of you guys, I would recommend an 80-20 stock versus bond mix at the moment. So for TSP participants, that is 80% in C fund, 20% in G fund. All right, for those of you guys who have outside 401ks, TSP C fund is the S&P 500 index. That would be so I'll put 80% of your 401k money in that, and the other 20% in bonds or cash equivalent type of stuff. Right? Again, only do this. I recommend if you are actually already withdrawing from your account and your account balance is adequate for your needs. If you find that dividing your balance by 240 is not going to give you a sufficient enough number to support your needs, I would not be doing that kind of strategy. I would stay 100% in stocks until you get your balance up to where it needs to be to adequately support your needs first. All right. So that's how my strategy works. I don't prescribe to the methods that professional financial advisors tend to recommend, and I think financial advisors are better suited for monthly budgeting, not for managing your investment accounts. All right, looking at the bond yield curve, I know this is going to be a little bit more technical and over some of you guys' heads, but we are seeing kind of an across-the-board increase in bond yields now. The 20 and 30-year yields are now back over 5%. They were not. They actually were back below 5 not too long ago, but they are back above it. We actually have a pretty nice-looking bullish yield curve here. It just goes consistently up all the way across until you get to this 20 and 30-year. Those are the only ones that are inverted at the moment, I believe. Yes, they are. Okay, one thing I did note here, though, the 1 month bond yield. Okay, I've talked about it before. whatever it is gives you a kind of prediction of what the next Fed funds rate is possibly going to be. Now, the current Fed funds rate is at 3.5 to 3.75 range, and it's been kind of biasing a little bit more on the low side of 375 as far as the 1 month bond yield is concerned, but now we're actually seeing it climb above 375. So this is telling me that the bond market is leaning a little bit more, not strongly, but biasing a little bit more toward a rate hike coming, not a rate cut at the next meeting. I have to double check when the next meeting is. I forgot to look that up. I think it's coming up soon, but I forget. I want to say it's this coming week, but I could be wrong. I have to double check the schedule. Okay, confirmed. It is indeed coming up this coming week. It's always on a Tuesday and a Wednesday, so this coming week, the 28th and 29th, is when the Fed meets again to discuss rate policy. Right now, this is biasing, like I said, toward a rate hike to 375 to 4, but not by a strong amount. As we get into Monday, tomorrow, or maybe even into Tuesday, if we start seeing this 3.8 start getting more rapidly up toward 4%, then I would say the bond market is going to be making a stronger bet that a rate hike is going to come this coming week. But as of right now, this kind of leans a little bit more toward leaving the rate unchanged, but possibly a rate hike coming at the next meeting, which they come in every 45 or so day intervals. So that should be in September, if I'm not mistaken. It should be around mid-September when that next meeting comes. So that's basically what this chart is telling me. All right. Now, that's not something that should alarm you, though. Okay. Usually, the common knowledge with investing has been the economy. The Fed does not normally raise rates unless they think the economy is strong enough to support a higher rate, and then they don't usually cut rates unless they think the economy is too weak to support it. That's generally what happens. Even though the Fed is more focused on inflation, which isn't always an indicator of what the health of the economy is, but a lot of times they go hand in hand. So that's why it's more of like a telltale sign and not more of a take it as gospel kind of thing to look at here. Lastly, for those of you guys who want to screen for stocks, these are the ones that are currently meeting my screener criteria. They are basically energy, communication services, technology, and material sector stocks. Nothing else interests me right now. Those are the only 4 sectors that are, as a group, expecting strong enough earnings performance over the next year to where I think they have a better chance of outperforming the S&P 500 in price as well. Okay. There are 2 companies here that I personally would not be investing in. I know those are the ones that have underwater earnings. That would be EchoStar Corporation. They had, this 3 quarters ago, minus $44 per share. So that's why they're so hugely negative. I think they really skewed the expectations of the communication services sector as a whole as well because of that. But I think that sector should still, as an overall, should have been given decent enough expectations. The other one would be the Live Nation Entertainment. Neither one of these pays a dividend either. So if you're wanting a dividend, these are going to be excluded by you anyway. But for me, on general principle, just basic rules that I follow for my own investing, I don't touch stocks that are underwater with their earnings. They have to be positive over the last 12 months, and they have to be expecting some kind of growth. All of these stocks are expecting 40% or more earnings growth over the next year. And that is my minimum that I'm looking for because, as you saw earlier, the broader S&P 500 index is expecting 16% growth. So what I want to do is go up about 5%, or at least rounded to the next 5%. For every tier I go down on the global industry classification system branches. There's 4 branches there. So what I'm looking for is at least 20% out of the broader sectors, and then 25% out of the industry groups, 30% out of the industries, and then 35% out of sub-industries. So we'll get to those. I think I have a slide on that as well. I double check, but there are certain groups in here. You can actually look from what these individual stocks are on the next screen that I'm going to show, or one of these that's going to show you what actual sector and those different groups that are in. What areas you might want to focus your attention on. Maybe you have trouble fixing it, deciding you want one particular stock. This is assuming if you're in a taxable brokerage account, by the way. You can't do this kind of thing through the TSP mutual fund window or through most usually I don't know that I don't think you can invest in individual stocks in an IRA either, but I could be wrong. I don't have one. You guys correct me if I'm wrong, but I'm under the impression that IRAs you can only invest in stock index funds, sector funds, or industry funds of some sort, but not necessarily individual stocks. Again, I don't have an IRA, so you guys tell me if I'm mistaken on that. I've not heard anybody tell me before, but that's what my impression is. All right, so given that, if you have a taxable brokerage account, these are the ones I would be looking at possibly buying personally. All right, and to help you guys with breaking down which groups, if you have a TSP mutual fund window or some similar capability in an outside 401k, or if you have an IRA and want to narrow your focus a little bit more for better performance than what you can get from stock index funds, these columns here will help you out here, okay? So focus on these 4 sectors particularly, and then if you want to narrow it down a little bit more, communication services sector, I would look specifically at media and entertainment industry group, and then of course cable and satellite. Well, EchoStar, I would exclude them personally as because of that underwater earnings, but they could still be worth having for some of you guys. For energy, pretty much anything actually in the energy sector at all, except for oil, gas storage, and transportation. I am not interested in that particular sub-industry, but anything else within the energy sector should be okay. For technology, I'm staying away from software. I like hardware and semiconductors, I've already said before. And if you want to narrow these down a little bit more, you can look over here on these to see what areas are covered by that. Mainly communications equipment, and let me double check. Hardware, storage, and peripherals for the hardware side. And then on the semiconductors, anything except for semiconductor materials and equipment should be okay. And then for materials sector, there's only one industry group, materials, and then there's only 2 industries within that sector that interest me. That would be chemicals or metals and mining. Metals and mining, I'm not interested in the gold company or companies that are in the index. There's just not enough expectation from it to be worth putting in attention to. There is one copper company and 2 steel companies that are on my list. Here are your steel companies, Nucor and Steel Dynamics. And then your copper company, Freeport-McMoRan. Those all meet my screening criteria to get in here as individual stocks. So metals and mining in general should still be a good group as a whole. And then the other group that I'm interested in for materials sector would be chemicals, and particularly commodity chemicals. There are only 2 of them. And let's see if I have, they are right there, Dow and LyondellBasell Industries. Those are the 2, all right? So that's all I got for stock screens. And also, that's going to wrap up this particular video here, right? Hope you got good information out of it. As you see there, I do expect the S&P 500 to still have good growth over the next year. Still should be seeing some good price growth from the index over the course of the year as well. So not really a reason to be afraid to keep your money invested in the broader stock index funds, all right? So there are always going to be walls of worry that we can climb, whatever, with at least as far as all the little telltale signs of possible recession. But even in a good uptrend, healthy economic conditions, there are going to be those little concerns. So don't fixate too much on if you hear anything that, well, this is a concern or that's a concern. Yeah, it's a concern to keep an eye on, but it doesn't mean that it's going to single-handedly cause the economy to crash either, right? So that said, staying positive, and I'm staying positive. You see, Deb and I are still invested heavily in stocks, 100% in stock funds and our TSP accounts. So if we're willing to do that and we get good results and you have an idea when things are going to go right, then this should be an idea that you shouldn't be so concerned as well. All right, that's all we got. Appreciate you guys watching, and post in the comments section any questions, comments, concerns, whatever, any observations you might have. Appreciate any and all kind of feedback, right? Even if it's just a like. All right, you guys have a great day. Appreciate you watching. See ya.